Hi, and welcome to Smart Beach Investors weekly real estate update for Florida's Emerald Coast. This is where we take a look at the vital market statistics, looking for trends and anything that will tell us where prices are headed in the short term and even the long term. Then we offer a little bit of analysis that will help you determine whether you should buy, sell, or hold your property. All right? That's what we do. I'm John Moran. I am the CEO and founder of Keller Williams Realty's At the Beach team and Smart Beach Investor. And that's what we're going to do here. So let's go ahead and get started. Here we are, post-Thanksgiving, pre-Christmas, pre-2024. It's coming at us like a freight train, right? So let's think about it. Where are we going in 2024? What can we expect out of our real estate market here at the beach? I tell you what, folks, everything I'm seeing screams it's going to be a rocky year, an absolutely rocky year, right? High prices, high cost of money, carrying costs are high, all that kind of stuff, right? True, all that. The one thing that really hasn't come up much, but it's starting to hit hard now, right? Just hitting us hard right now, at least my group. And we do a ton of business, so if it's hitting us, I'm sure it's across the board. Here's what I'm talking about. Lending, all right? Not how much. It's about the ability to even get money. What's happening right now is the banks are holding on. It's hard to get a loan out of a bank right now. I feel bad for the loan officers. I feel bad for the real estate agents. I feel bad for the buyers and sellers because they're all hearing, yeah, I can do it. Yeah, I can do it. Yeah, I can do it. And then it gets to underwriting, and these underwriters at the banks are just saying, easy, Tiger. We got to take a hard look at this. I'll give you an example. I pulled this off the wire here. Traditional loans have gotten harder to come by. Nearly 60% of households said recently it's more difficult to get credit than a year ago, according to the New York Fed. Okay, it's the highest level recorded since 2013. People, it's hard to get money. These banks are pulling back. Here's some more. After an ugly third quarter, banks rolled out plans last week to shrink themselves back to health, right? Profits dropped by double digits from a year earlier at a number of them, including 44% at KeyCorp, 32% at Citizens Financial, 28% at Truist. These are not good numbers for banks, people. Take a look. They're not good numbers for banks, okay? KeyCorp came out and said they are going to become smaller, simpler, right? PNC Financial disclosed they're going to lay off thousands of people. Not good, not good. Truist sold their student loan portfolio this summer and said they're going to downsize other parts of their operation. Not good. Citizens said they're exiting the auto loan business, right? And they're going to continue to scale back on the mortgage business. Okay, folks. This is across the board. Banks are getting tight with their money. They're just getting tight. Where this shows up, it's not just on mortgages. If you own a business, very hard to get money for R&D. Very hard to get money right now out of the bank for expansion. They're not giving it, right? They've got all this money tied up in the commercial side of the business. All these office buildings downtown that are so low on their leasing right now and expected to get even worse with, since COVID, work from home and all that stuff. The commercial side of the business is just, right? At least the office space part. Yeah. And so what happens is these banks, especially these regional folks, have a lot of the value underwritten with these commercial loans. Okay, it reminds me back in the day when the subprime mortgage meltdown hit, when Bear Stearns, Salomon Brothers, these guys blew up and went out of business, right? With the subprime mortgage meltdown, too big to fail, all that stuff. It was so easy. Stated income, no doc loans. Banks were giving money left and right for anything and everyone to buy these houses. And then it crashed and the banks just tightened up and they stopped giving money. And that's when we saw foreclosures, short sales, all that. Okay. This reminds me a lot of that, except not on the residential side, but on the commercial side. The mortgage-backed securities have moved from residential to now you got commercial mortgage-backed securities that are just the banks. And it's causing them, like we talked about, to pull back. right? The other aspect that's going to come up on this is these businesses are going to pull back on their R&D, like we talked about. They're going to stop hiring. They're not going to be able to expand, and you're going to see unemployment go up. And that's what the Fed needs, unemployment go up to battle this inflation. So all this turmoil tells me that 2024 is going to be sketchy, right? It's going to be hard. You're still going to have death, disease, divorce, right? You're still going to have cash deals. Cash is king. Remember that? You're still going to have all that, but money's going to be tight from the banks. Okay, so get ready for that. Get ready for that if you're a buyer or a seller and you're trying to figure out what to do. Okay, let's go look at the other stuff that we always follow: supply, demand, those kind of things, so you know what's going on there. Let's do that. Let's look at supply. Okay, because supply is a massive influence on where prices are going. If we got a lot of supply, a lot of properties for sale, it's hard for prices to hang in there as buyers have options and sellers have to compete for those buyers. So let's take a look. Destin, homes for sale, supply-wise. Going back to December of last year, yeah, it's not a dramatic uptick, but it's certainly an uptick. You'll see that December of last year, we had 388 homes for sale. Now we're up to 462. That is a fairly significant upturn. And if you look at July on, you've seen the number of properties for sale in Destin homes anyway has gone up. Is it enough to impact pricing? I don't know, it'd be hard to say here, but let's take a look at what is going on with the pricing. Oh, interesting. Look at this. This is the median sales prices on homes. As that inventory has come up, we have seen a pretty significant drop off in prices. That's interesting. Yeah, look at that. That's a pretty steep stair step from August, where it was 1.2 million down to 800,000 now. Okay, interesting. Let's look at the list prices to see if this is a trend it's dropping as well. The list price for homes in Destin don't follow nearly as strongly as the sold prices do. They look almost flat. They started back in December last year at $1,399. Now they're at $1,377, which is down from $1,479 in July. But relative to the sold prices, it still looks like list prices are pretty strong. I think what might happen though is you're going to get a couple sellers that are going to sell ahead of what they believe the market's going to be. They think prices are probably going to drop. They're going to take what is looking like a low price now in the hopes it's going to be a high price if the market falls. I think you're going to see more and more of that. You'll see some volatility as we move forward into 2024. Interesting. Let's take a look at condos. What's going on with Destin area condos? Well, looking at the condos here, you can see, right? There's a steady incline of supply. There are more condos for sale now. 23.5% more condos. Went from 759, we're up to almost 1,000 condos for sale now. Okay, so there's more supply. Is that going to impact the prices of condos the same way it did in houses? Well, let's take a quick look. All right. Not as dramatic as what happened with the houses, but there is a steady softening of prices for condos in the Destin area. Yeah, that's what you would expect. Not a complete fall off for sure, but certainly a softening as supply is increasing. Yeah, look for that to continue in 2024. Here's the median list price trend for the condos. Again, not a huge fall off, but certainly it feels like it's softening. Kind of goes along with what we just said. Look for 2024 for condos. Maybe not complete fall off, but it doesn't look like they're going up either. What's going on with 38 homes? Is that going to follow the same type of thing? Well, let's take a quick look. Here's the 38 homes number for sale, supply. Okay, we got a little bit of a wave. Looks like it's going up as the year goes on. Falling back a little bit this time of year. Okay, but still significantly up, 783 now versus December of last year of 601. That's a 23% up. So yeah, there are more properties for sale on 38 as it relates to houses. Okay, so is that going to impact the prices? Let's take a look. Here's what goes on 38 though. heavily influenced by independent sales. Like we'll have a normal sale, let's say of $1 million, $1.2 million, and then a $12 million sale. And it causes problems. There's just not enough volume to even out those big swings. Somebody might go and sell a house for $800,000, and then a neighbor up the street sells one for $1 million, or excuse me, 4 or 5 million. It throws the numbers off. So look, it's hard on 38 because it's just so schizophrenic. But again, we know if the number of properties listed for sale goes up, it's going to be hard on average to keep the prices. Now you're going to have these one-offs, two-offs for sure, and that's what 38 is about. Let's take a look at some more info here. Median list price, yeah, because here's where it normalizes, right? List prices aren't as wild. This is Joe and Mary Blow, right, listing their properties. $1,999,000 to start or to end last year, $1,990,000 this year. A little bit of a fall off, not much, pretty flat. Okay, I think we're gonna have to wait for more data to give a prediction here, but I would look for a softening of prices just because of everything on 38. What about list prices? Or that was list prices. How about condos? What's going on with 38 condos? Same story, maybe. Well, look at this one. Supply's up. Supply is up definitely from 136 to 222. That's a pretty good jump, almost 40% in just 12 months. There's more supply. I mean, there's only 222 condos for sale. It's not a ton, but it's certainly more than 136. Will this cause prices to go down? You would think so. Let's see. 38 is weird. See. Not only are prices not down, they're up dramatically. Amazing. A little bit of that seesaw we saw with the houses, right? And again, I think what this is going to do is it just talks to, you could have a condo sell for 900,000 and then right up the road, one sells for 10 million. It throws the numbers off. It skews them strange. Let's see about the list price. Yeah, okay, so this is what you would expect. The list prices are still pretty, maybe even a little up, not a ton down, not a ton up. We just got to wait and see. 38 is kind of slow to the game here. Yeah. Again, though, if I was to predict, I would say the supply is up, which is going to cause pressure on condo prices. List prices aren't jumping up. You're going to have some sales prices that go crazy. Somebody gets a lot, somebody takes a little. So 38, we're going to have to just kind of watch and play along. Panama City Beach homes, what's going on there? Take a look. Okay, this is interesting. It's up. It's certainly up from 476 to 566. Which is an increase, no doubt, 16%, but it's more of a gradual. It's a gradual. Is it going to impact the housing prices? Well, not really. Looks like prices are maybe even up from 522 to what is that? 550? Okay, they're up. I mean, a ton, not a ton. Panama City Beach condos. Let's take a look at what's happening with Panama City Beach condos. Take a look here. Okay. Boy, that's a pretty big jump, actually. Almost, 31% it looks like. From 700 for sale up over 1,000 in the last 12 months. It looks like a pretty good increase in the number of properties for sale. Supply, okay? So you have more supply generally means that prices are going to come down. Let's take a look. Okay. Yeah, I don't know if they're down. I don't know that they're up either. It looks like it's, if you look a little up, a little down, a little up, a little down, but across the board, it looks like they're pretty flat, okay? From a sold price analysis. Means sellers aren't dropping their price dramatically, but how about future sellers, the list? Oh my, it's as flat as can be. Okay, so the Panama City Beach condo market is flat, okay? We've got the supply going up, but the pricing is flat. It's not going down, it's not going up. And when supply goes up, like we've talked about, I would look for a softening in condo prices in Panama City Beach in 2024, okay? Probably not a crash, but it looks like a softening, yeah. So where do we go from here, all right? Where do we go from here? That massive question, right? Money's tight, it's expensive, people are worried about the economy going forward. All these things indicate a softening of prices in 2024. No, just I don't see any doubt in it. So what do you do? What do you do? It's the same as it always is. If you're in this thing for the long haul, for 10, 20 years, 30 years longer, the better, dance party, right? Awesome. Awesome. Prices go up over time. They always have, they always will. There's going to be some fluctuations in the middle, but over time, they always go up, right? That's the way it is. So if you're in for a long haul, tie a knot, hang it on, max out your rent, do all that stuff, you'll be fine, right? You may even start looking, because if prices come down, there might be some buying opportunities here from an investment standpoint. If you're 5 years or less, I think I would get out now. I would run, right? Because we don't know what the future is in the short term anyway. Matter of fact, it looks like it's going to give back some price. I would run, all right? I think we even saw some of that with the people in Destin homes that are selling out now because they think the prices are going down. They're getting ahead of the market. Maybe they're smart, maybe. So yeah, 5 years or less, send an email, info@smartbeachinvestor.com. This is what we do. We maximize your position as an owner, a buyer, or a seller. So let's talk about what you got, okay? Long term, all day, baby. Okay, that's what's going on this week. Something different next week. We'll see you then. Talk about it.